Hello, wonderful people. Today, I'm going to show you a strategy that of using a TDI, and I shared it in the Telegram channel, and somebody got in touch with me that they don't know how to use it. TDI is one of the best indicators if you know how to use it, and so let me just show you from the Telegram channel this. These are the indicators. So the first one with the TDI alert is for MT4. The second one is for MT5. The third one is a tutorial for how to do it on mobile, because there is no custom made TDI for the mobile, so you have to follow the instructions of how to do it. The fourth one is a TDI for MT5 also. The fifth one is a folder, a PDF strategy of, the different ways that you can use a TDI. You can use it in Forex, you can use it for boom and crash, you can use it in volatilities, indices, and whatever you want to do with it. So a TDI uses the movement of RSI, the middle Bollinger Band line, which is called the market baseline, and the upper and down Bollinger Bands. Bollinger Bands are always used to somehow measure the volatility of a currency pair in the market. When the Bollinger Band is tight, let's take for example, we go back to here. When this Bollinger Band that you're seeing down here, just a minute, let me take an arrow. This here, the upper Bollinger Band, the blue lines, that is the upper Bollinger Band. Come down, that is the middle Bollinger Band, which is also the market baseline, and this here is the lower Bollinger Band. So anytime you find the Bollinger Band or the Bollingers coming together like here, down here and here, like they are squeezing, you understand that the market at that time, the volatility has squeezed, and so it is creating room to break free from that zone. I think we are together. Anytime you get the Bollinger Bands coming together, of course they will never come like together completely, but the moment the Bollinger Bands tighten, it means the room has been squeezed, and so from there the market will be breaking free from that zone. Hope you are together, excuse me. So this here, let's not focus first on the main part of the screen. Let's focus on this Bollinger Band or the TDI. Check here. Check here. This, the upper, the down, they've come almost together. So immediately after the market or the currency or whatever, trading pair you are trading has moved out of the resistance zone, it will always break free. And now for this, we can take the resistance zone to be, let me take an horizontal line. We can take where I've just placed the red line, we can take that to be the resistance zone. Okay, why are we taking it to be the resistance zone? Because the Bollinger Band had tightened up, meaning the market wants to break free. And the lowest, can you see the lower part of the Bollinger Band acts as support. The top part of the Bollinger Band acts as resistance. And so the market always, of course, because I'm trading now boom and crash, the market will sometimes hit and go out of the bands, but it will always come back into the bands. So what we are seeing here, so the down line, which is this blue line here, exactly where it's facing, was used as the support. So the moment it hit the support and the bands had come together, it means it was at the most strongest support level and it can't go further than that. So the only way out was for the market to rise from that support and move onwards. So if you are trading boom and crash, it is very necessary to understand the support and resistance of how these spikes come. I will talk in my next tutorial, I'll talk about boom and crash, how to trade, knowing the right entry points, how to scalp. It is one of the currencies that can be very profitable, but still at the same time very tricky, because you find, like, from here, let's go up. We go up from here. This green candles is an upward movement. Every minute it is moving up, and then after some point a spike will come and it will crash down. So that is why it is called boom and crash. For boom, it booms going up. For crash, it crashes going down. But these are spikes in whichever direction the currency you are trading in. So we have boom 500, crash 500, boom 1000, crash 1000. So for booms, they spike going up. So all the time, these scalping candles will be going down for booms. So the spike goes up, but the scalping small candles are always going down. So the trend is always like downtrend, and then the spike comes and pushes it up. For the crashes, the scalping candles go up, and then the crashes go down. So that is a difference, okay? And the difference between the 500 and the 1000, the 500 is more volatile, or, have frequent crashes than the 1000. But also the 1000, if you are a trend trader, you can always trade the 1000 pairs easily. But the challenging thing with the 1000 is that when the spike comes, it is always double of that which comes in the 500s. Again, for example, one lot size in the 500s gives you $1, earns you $1. So for 1000 pairs, one lot size earns you 50 cents. So the value of the 1000 is half the value of the 500 pairs. Hope you understand that. The value of the 1000 pairs is always half the value of the 500 pairs. Okay, so I'm not going to explain how to create this TDI on the mobile. If you're interested, please check in the description below. The Telegram link is put there. Log into our Telegram or join our Telegram channel. Download the indicator for the MT4, for the MT5, whichever platform you're using. For me, trading boom and crash is specifically for binary.com. So you will need either to do the mobile version or the MT5 version. Okay, so for the mobile version, you will create a window, which is now, like for example, this is how you add the indicators. Let me go back. Let me go back. Sorry for that. Let me go back. This is a platform for the MT5. The blue shows you the market or the currencies that you are currently trading. You can choose from. The next tab shows you the chart. The third tab shows you whatever history is that is in your account, and so forth and so forth. So when you come to the chart, you tap anywhere, this round chart will appear. Let me call it a chart for now. Will appear. And so this first tab showing the square, the cycle, whatever, is when you want to get this, the drawing tools, lines, angles, whatever. We go back to the next one. So the other properties there, that is M1, M5, M15, M30. Now that is the time frame that is always like on the MT4 or the MT5, the top part of your chart. So you choose if you want to check the 1 minute chart, you want to check the 5-minute chart, you want to check the 15-minute chart, you want to check the 30-minute chart, and then H4, you just go on like that. So that is where you choose the time frame. And whatever you have here on the mobile phone is up to 1 month, which is now MN. So this is monthly, okay? This is weekly, this is daily. So, and then now when you want to add your indicators, you click on the F sign. Are we together? You click on the F sign. The F sign will give you now the list of all the indicators that you've either installed or you want to install. Okay, so let me go back. So here, anytime you want to trade in Forex, there are 3 very major moving averages, and that is what is on my screen. Okay, 3 major moving averages. The first moving average is moving average 200, and that is what you're seeing with the white color. This moving average 200 gives you the direction of the trend of the market at that time. Okay, it gives you the direction. So if the chart is below, it tells you that we are on a downtrend, and if the chart is above, it tells you that we've been moving on an uptrend. Okay, the next moving average is the red. I think you can see, like here. And let me bring an arrow. Okay, I need an arrow. Do you see the red moving average there, where the crash started? That is a moving average 50. The moving average 50 is mostly where, like for boom and crash, is temporary direction, but also the point where the market reverses. So the 200 shows you the trend direction. 50 or 48, you can use 48 or 50. That shows you where, like, the immediate reversal points of the market. And then there is this other one, the golden one. That is moving average 13. Moving average 13 now for boom and crash comes in handy, because every time the market reaches that line, if it is on a downtrend, every time the market reaches that line, it must crash. If we are on a downtrend and we are trading crashes, okay? If we are on booms, every time it reaches that 13, it must spike up or boom. Okay, so you can also add another indicator, like we go to the main chart. You can also add another indicator, like to give you more clarity, like the Bollinger Bands here. And the Bollinger Bands you can use whatever color. I want something different from what I have in front. The default setting is always at period 20, deviation 2.00. Okay, but most of the time you can come and change this to 1.619, like that, to make the Bollinger Bands, the upper and the lower, to be a bit sensitive. So the 21 is like the market baseline, the middle Bollinger Band, and then this 1.69 is the deviation, like the upper Bollinger Band and the down. Okay, and then shift 0, apply to close, color your choice, and then the levels, you just leave it like that, and then you click done. So do you see our Bollinger Bands have been added? So all the time the market reaches the upper Bollinger Band, if it was on a downtrend, it will crash back every time. Like for here, you see for here, it was on an uptrend and then it started crashing, coming down, and then started climbing, reaching the middle Bollinger Band, it came down again. Okay, now coming to the Bollinger Band on the main screen is still the same as the Bollinger Band that is on the TDI. Okay, so the Bollinger Band on the TDI will be able to show us the exact volatility of how the currency is behaving. All right, it will be able to give us, like, it gives us a rough picture of where the market is going, how many players are in the field. Like you see the window where the TDI is, I've put these lines. Okay, you see that line where I'm directing, which at the end, when you bring it here, it is 20. So there is level 20, there's level 30, there's level 50, there's level 70, and then level 80 and level 90. So anytime you find in your settings, there is the RSI that you will input within the Bollinger Bands, and the RSI is the golden line. Okay, you'll always set it to whatever colors you want that suits you. So do you see that golden line? That golden line is RSI 14. Anytime the RSI 14 is below this 50 line, then the market is on the seller's level. Anytime the market RSI is above level 50, above, like here, it means it's moved from the seller's level to the buyer's level. Okay, but that does not necessarily apply. Also, make sure that for you to know which side of the market you are in, if mostly you are on the lower side of the Bollinger Band and you are also on the lower side, the RSI is on the lower side of the Bollinger Band, means we are officially in a seller's zone, and so the market will be looking for a way either to go up to the buyer's zone or continue with the trend downwards. For example, what I mean here, like this one here, this point here, it's officially on the buyer's area. Why? If you check my arrow very well, we are at level 70, and level 70 is way above from level 50. So level 50 is above level 7, is above like the market medium ground where the buyers and the sellers are operating. So when it is above this in this area, it means we are in the buyers area, or the trend of the market at that time is moving up. And you see also from this point here, just a minute, from this point here, the golden line, which is now the RSI 14, crossed the middle Bollinger Band or the market baseline. And that was officially crossing from the seller's area to the buyer's area. And a few pips later, it reached the 50 line, which is there. And immediately it reached the 50 line, it was now officially on top of the Bollinger Band, and it was again above 50. And that is why now on the main chart, you find, let me take a line. You find from like that area, it was now officially going on an uptrend. Okay. There. Okay. So it crossed the middle Bollinger Band, moved from the seller side to the buyer side. On the TDI also, on the lower indicator, it moved from the lower point here to the upper of the Bollinger Band. Okay. And then the RSI crossed level 50. So it means we have moved officially from the seller side to the buyer side. To add on top of that, the Bollinger Band at this time was also like coming together, squeezing together. You see up here and here. It was squeezing together, the blue lines, the up here and here. So that squeezing together was telling you the market is looking a way of breaking free from that zone or from that area. And so from there, you would expect the market to go in a direction until it reaches level 70 or level 80, where it's supposed to reverse, then start coming back again. Okay, so this is just one way of how you can use a TDI to trade boom and crash. I'll still be bringing in more tutorials of how to use the TDI in Forex currencies, how to use the TDI to trade all the volatilities like volatility 75, volatility 25, volatility 50. You know, each currency has its own special feature, but the basic thing is understand how the market will react when it reaches certain points. Now, for boom and crash, before I forget, for boom and crash, this is crash that we are checking. So it reached here. If a crash happens and it comes to the edge, you see here, to the edge of the Bollinger Band, not outside, but the edge, then it tells you, like, you see, let me bring it long. You see here, it was a point where the market was at oversold, and so it started crashing. Also on the top, yeah, which is now here. So it had gone to oversold. On the lower band, it was at level 80. And when it started crashing, the first crash came. It crashed. And on the TDI, it rested here. Okay, that was the second crash. There. So the first crash happens up to that point. The second crash happens up to that point. And then it started now, which is here. Then it started like going up 3 minutes. So look here. The market crashes or reaches the point that is supposed to crash. It comes down one crash. Then it starts like it wants to gain momentum. Unfortunately, it was on this do you see this golden yellow moving average, which was the moving average 13? So it was there, which is also now acting as resistance here. So it hit it, and then it came back past the middle Bollinger Band. And then when it started like going up again, it reached now here, which is now exactly the meeting point of moving average 13 that was coming from up and the middle Bollinger Band. And so that was a resistance point. And on the indicator window down here, it crashed all the way, now going outside of the Bollinger Band. So on top, it's going outside of the Bollinger Band. At the bottom, it's going outside of the Bollinger Band. So somehow, the market will still have to find a way of coming back into the Bollinger Band, okay? Back into the Bollinger Band. But we don't know how long it will go in the Bollinger Band before it crashes again. Here, it goes back all the way into the Bollinger Band, and then it reached again the middle Bollinger Band in the upper window there, and it had to crash again. Why? Because on top here it had been used as a resistance, and so here again it had to be used as a resistance. But at what point do we know that the market will reverse? Down here, when it crashed, because on top it had reached the middle Bollinger Band. So in the indicator window, TDI, it crashed and came to the edge of the Bollinger Band. Sorry, here to the edge. It didn't go outside the Bollinger Band. So that was a good sign to tell you that the market now is getting contained. So from there, there will be no more many or big crashes, okay? So from there, it started now going up. Check it from the indicator window. It started going up. Another crash happened, but this time again, it didn't go past the previous. So if you are even to draw like on the TDI itself, the peaks of the RSI, see this peak here and this peak here, it landed on the same line, which means you can draw a support point on top here, on top of, sorry, on these two peaks, sorry for that. Now, on the main chart, check this. There is this peak, and then there is this peak down here. Okay, so those two peaks, on the upper part, it is this peak and this peak and the next peak. So it is slanting. Okay, let me draw a line there. This. Do you see it is slanting? Now, unfortunately, I cannot. Let me try and see if I can be able to get that line. Yeah. Good. So the top one is slanting down. The bottom one is on a straight line. Okay. So that is one thing that we call in the market a divergence. Like the TDI is refusing to agree with what the main chart on top is saying. Another way you can see or look at it is that the bottom one, now this line, the red line here, is acting as a support. Okay, so any other time the crashes will come, you will not expect it to go past this point like down here. Okay, so it will always be reaching this point and then start going up. So that is always another indicator that will always show you that the market is ready to reverse and to go up. Did you see those horns, like the peaks where we've placed our lines? Okay, so that is one way of how to use the TDI in the indicator for the boom and crash. For the other currencies as well, it still applies the same way like that. But now for those currencies, you will not get it to be like exactly very sharp edges like this, because they are smooth, they are moving up and down. But for this, if it is a spike, it is a spike until it reaches to certain point and then it stops. Okay, so this sorry for that, this peak here, it crashed, which is now this peak here. It crashed, came down, but it didn't go outside of the Bollinger Band, so it reached the middle. Now let me talk about the sky blue line that you're seeing, or the aqua line. The aqua line is a moving average 2 in your settings, the ones that you will download. It is a moving average, and most of the time when the market is, when boom and crash is dropping or the spikes are coming, it acts as resistance as well. So on top here, we were using the middle Bollinger Band, which is that. So when it reached this point, it crashed. When it reached this point, it crashed. And when it reached here again, this point, it crashed. Okay, so for the bottom TDI, when it reached, before it reached here, before it, like the market was going back into the band, it reached the moving average 2, it crashed. Now this one here, it did, let me just take this line off for now, just a bit. So when it reached there, it didn't crash, which means it was telling you it has not acted as a support for now. And then again here, it didn't respect. Okay, it went past the moving average. Now this one here, the moment you find a crash has come from the top and comes and lands at the bottom. Okay, just trying to, at the bottom of the bottom of the peak of the crash is not very far from the moving average 2, or it has not broken through moving average 2, then at that time that the moving average now, which is this sky blue line, has become a support, a very strong support base. And so from there, the market will no longer crash. So it was a one way of telling you that this prior supports, that the first, these two prior supports that, the market had shown us that the market will start going up. It has worked, and now the market is on the way. And look, from the moment it crossed here, it has crashed, didn't break through more than, this sky blue line. And then it starts going up. Sorry. Goes up, 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 all the way. And check where it reaches. It goes up to, level 80, which is now above level 70. So level 80 is a place where it can now start crashing again. And you see level 80, level 8, around 85, and then from there again the market starts coming down. Okay, so that is just a simple way of how you can use the TDI. I'll still do more in-depth video of using now the TDI to really crash the market in a very big way. But for now, this is just a basic of using a TDI. Okay, let's check the market very well and if these supports really work. So the market starts crashing here, and check very well. The moment it crashes and reaches this line, the 50 level, and then it starts picking again. When it goes up, it meets with moving average 2 and then the market baseline, which is the middle Bollinger Band, and it acts as resistance at that time, and it crashes again. It comes outside and then goes again to the middle Bollinger Band. It crashes again, comes outside, and then it starts going. Now here it breaks through the middle Bollinger Band, but check where it reaches. Check where it reaches. The moment it touches up the peak of the upper Bollinger Band, it crashes again. Okay? And then from there, it creates more harmony, like there was no sharp edge. So look here again. Where it touched the upper, like where it was making contact, it crashed, came down a bit, and then as it was a small crash, and then as it was picking up momentum, when it was going to meet again there, when it was going to meet again, it crashed now, and in a very big way. Okay, so TDI, especially for boom and crash, is one indicator that somebody can use to trade, because boom and crash respects support and resistance very much. It respects all the support and resistance in a very big way. In a very, very big way. So you can use this to catch your spikes. You can use this to scalp the market, like, getting into the market, buying 2, 3, 4 candles and going outside of the market. Okay. And I've been using this TDI to trade, boom and crash, and it is really, really, really working wonders. Check here. It comes down below. It starts going up. It didn't respect this, so it goes up, but on the middle window, the main window, the middle Bollinger Band was always used as resistance, and dropping, and then when we go just above, it crashes again. Okay, and then see the down part here becomes the resistance. It goes a bit out of the way, and then goes out of the way, comes in, comes out. Look here, goes up again. But on the middle, on the main chart, it is this. It is the blue line that is really used as resistance. Okay, so down here, because you've noticed that the top part is the one that is now actively being used, so the bottom here is going up and down. Look, it reached there, acted as resistance, came down, acted as resistance, came down. And then now, if you've seen this, that it's acting as a resistance and coming down, you will know that the market will go up but very small, and then it will crash. Number 2, which area of the RSI level were we in? We were on the lower area, which is between 50 and 30, which is the sellers area. So before the market could get the momentum and say it has become strong to go up, then it crashed in a very big way. Okay, because we were still in the sellers area between 50 and 30. That is where we were ranging. And then on top of the chart again, on top of the chart, we were, I need to pick this arrow. Do you see this line? That is a moving average 200. So it tells you that the market has changed trend from the upper trend, and now it is on a downtrend. You see, the market crossed. So from here, you will be expecting more spikes, because it's like we've officially entered now into a downtrend. Okay, and you see from the top line tells us we are under moving average 200, and at the bottom here we are in the 50 and 30 area, which is the sellers area. So it is more likely to get more spikes here, and because we are under the moving average 200. So for today, I'll end this lesson or tutorial there, and I'll be doing more videos. Please subscribe to my channel. Welcome to the great family of the Pip Kings. We are rocking the market. We are having the game of blues all over. We are rocking and rolling in the boom and crash market. These are the easiest pairs that you can ever trade. So make sure you click the like button, you subscribe, put on the notification bell. And for those who want to get this indicator, it is in our Telegram channel. Okay, it is in our Telegram channel. And they're here in the Telegram channel. Here, they are here. So we have for MT4, which has alerts, for MT5, which is now the binary.com. And then the third one here is for mobile. For mobile, it is a PDF. Let me open that. It will show you instructions of how you can do it on your mobile phone. You see, it is a PDF. All this TDI indicator for mobile, it will show you the instructions of how to install a TDI on your phone, and at the end you see the result there. So that is it for the mobile. And then the third one for MQL5. Now this MQL5 is like the source code of the second indicator up there, and then now this one is strategies, the different strategies of how you can use the TDI. You see, like this one, it's showing you the different lines, what it means. You can always configure them according to your colors, but as long as you are able to identify the upper Bollinger Band, the lower Bollinger Band, and the middle one as the market baseline. The red one here is used as when I was doing the description there, I gave it as the red one was the moving average too, that it was acting as resistance every time the RSI 14 was trying to reach the blue line in my chart. It was reacting back. So in this chart here, they've used it as red and green. Those are the main moving averages in a TDI. So this tutorial will show you different phases of how you can use TDI either for Forex or different pairs that you're trading, and it is one of the best indicators if you know how to. It is one. So I'll be tackling other strategies either in a week's time or so to show you how to use in other Forex pairs or other indices. Okay, so until next time, please like this video, share, invite somebody to join our Telegram channel. You see, we are still new a bit, 11 subscribers, but we are sharing very great resources in our channel. You see, before I forget, we have this spike detector. You see the main screen, and there is the one at the bottom. So it is one of the best indicators that you can ever get for trading boom crash. So we have that in our VIP group. It is affordable at a small cost. Look this channel here. Okay, look this channel. The down one is giving you when the trend is changing, and then the upper part is giving you when the spikes are almost happening, and then there is the support and the resistance. So we are full of resources. We have so many indicators. Look at this. The sign comes and they are pop immediately. Look at this. The sign comes and immediately a spike comes. So this indicator is very awesome for trading spikes. Very awesome if you want to scalp. And it is more. Look again. I've shared an EA, an expert advisor that you can place trades and it will trade for you. And this one is one of the premium indicators. Actually, I bought it very expensive, and I'm just sharing with people in my group because I believe in sharing, in giving. Okay, and this here is the link to our channel. Okay, these are the different trades that we've been taking. Can you see this? You see the buys every time. Like I time before it spikes I buy, before it spikes I buy. So I've mastered the game of the spikes. I am the master there. So God bless you. subscribe to this channel, and in the description below there is the link to our Telegram channel. Please join, please support us, and we are there to rock. Thank you. God bless you. Bye.